presentation and the slides. There are some things I'm going to show which won't be available on the slides afterwards because they're confidential. So you might want to grab one of these things and start taking photos in a second for those. So let me start on the investment side. Those are some of the statistics I got from an angel network. They said, and when I'm using the term here, private equity, I don't mean in terms of my firm, which is a private equity firm investing in later stage companies. We're talking about private equity as in equity capital from investors. And it's 2% success rate in raising funds. That could be from angels, could be venture capital, could be other sources of funding. Only 2% are successful. Now, why is that? And how do we make sure if you're looking to raise money, you're not in the 98%, apologies for that, you're not in the 98% who keep failing. Let me just close all my outlooks. Now, you won't be able to see that on screen properly. Don't worry, I'm not going to read through it either. That's why we're going to make the slides available to you. But one of the things that we're covering here is, well, what are the reasons for failure? And I'll go into these in more detail during the course of this, but I wanted this to be data driven and very much based upon what we're actually seeing out there, everything from top heavy management to laughable valuations. And I'll go into more detail on each of those as we go on, but you're really going to want to have a look at this in more detail afterwards as well. Serial dabblers. These are things which you might have suspected or not even realized, which puts you in the 98% who don't get funding. Flawed revenue assumptions, and I'm going to show you some investments that I've made and why I invested in them. So I'm going to show you some pitch decks, and I'm going to show you some revenue projections from a company I put money into as well, and why I did it, what I liked. And I'm nothing special in the sense of the reason I did it is why others would have done it as well as investors. So you're going to get the hands-on view in just a moment. Too much dilution, too complicated deal structure. Again, something we'll touch upon as we go on in this presentation. Raising too much money, not raising enough. Again, comes down to financials, but I'll dig deep into that, and momentum. So how do you ensure you are not in the 98% who are going to fail? Like I said, don't try and read that now on screen. This will be made available to you. This is more like one of those lectures where your lecturer says, this is an overview for the textbook you're going to look at a little bit later. Let that sink in. That's my role as a deal maker in essence. Bottom right-hand corner, that's the God's honest truth. You don't need to know more. Liv's done a brilliant introduction to what deal makers do, but that's pretty much a good summary. I run a private equity firm. We invest, and that's less relevant today to my talk today. We've invested in healthcare and clean tech principally, and exited those investments. And we have several different types of funds. So I have to look at that as a professional investor. And that's not so relevant because you're not looking for private equity investment. You're not looking for, 3 million, 5 million plus probably. You're probably looking at smaller sums, and you're more at the venture stage, the angel stage. So I'm going to put on my angel investor hat on for the rest of this, but this is just so you know what my background is as an investor. I've written about this whole area. It's not a plug to buy my books. Trust me, £1 in royalties barely makes it worth my while mentioning them. But I'm going to give you my knowledge, not just as a professional investor, but also as somebody who's studied this sector and talked about it on air and in books for the last 20 odd years. So I'm going to give you quite a broad view on all of this. Now, what are the things which investors look for? Again, don't read this right now, but some of the topics we're going to cover and we need to know, and I'm going to show you with the pitch decks that I invested in, the things that I found in them. It's all very well in a sort of hypothetical basis, me saying, oh, it was the team, honesty, management team, commitment, chemistry. What does that actually look like when you look at a pitch deck? So I'll show you those in a second. Similarly with businesses, people will say to you, oh, high return, the stage they're at, financial forecast, intellectual property, and so on. Well, what does that actually look like when you look at an actual business's pitch deck that's raised millions? Okay, because I always find it easier to look at a good example and copy them than think of theory and try and work out the answer yourself, okay? So whilst that's the theory, I'll just share the presentation with you. Now, the bit we're going to look at today really is everything from seed, angel, friends, family, fools, accelerators to the early stage stuff. We're not going to really cover mezzanine, IPOs, obviously, and public markets, right? So you know where we are. In other words, my point is this is relevant for you guys. It's good news. This is an old slide. You can probably work out it's an old slide because it mentions Greensill, but it's an old slide, 2019, and that's continued into 2020 despite COVID in terms of the amount of venture capital coming in. And venture capital is a proxy for saying angel investments as well, because the way VC investment goes, it tends to drag along angel investments. So there's more and more capital coming out there, and you only need to look at the news report. So my point there is if you're raising money at the moment, I can't think of a better time to be doing it. I can't think of a better time to be doing it. So what are the problems and the 98% issue and the problems we're going to solve here? Well, one major problem is Alpesh. Do you know anybody at XYZ firm? Of course, warm introductions are important, but those kind of generic, pointless questions don't open up doors. So how do we open up some of those doors, and what is it we're trying to do? And this is not how it's done. And sadly, too many queries I get will be people saying, do you know anybody at XYZ? Which actually tells me more than the fact that they don't know who they should be approaching. They don't know how they should be approaching them, but it probably suggests their pitch decks aren't right, none of their documentation's right, and they don't have a systematic approach. So let's be more process driven, and I'll show you actual spreadsheets I think you should be using for being process driven and professional in your fundraising. I need you to be professional. What you're competing against, and Liv said it perfectly when she said it's about making money. This is what I do in my day job. In my day job, I'm looking at the cash flow companies are generating on the capital they're raising. This is what I'm looking at as an investor. And I'm looking to try and make 30 to 40% per annum. Okay, so your internal rates of return have got to be at least better than that by a substantial margin, because I'm going to discount you for exaggeration. I don't care who you are, you're going to get discounted for exaggeration. Now, you're competing, therefore, for my money either going to you or to Goldman Sachs or to the public listed markets. And in my day job, you're competing against me giving you money or giving it to Apple or giving it to one of these listed companies, one of Apple's suppliers or their customers. So that's your competition. I don't think to myself, yeah, I'll give it to an angel because I'll give it to a startup because for fun. As Liv said, it's for making money. So who are your competitors when I'm looking to make money? Well, I'm afraid Apple's one of your competitors. And if you don't think you're going to be outperforming their consistent returns, then why should I give it to you anyway? So it's going to be about internal rates of return. And just so you know, that's a universe from which I'm going to be picking. And that's the 12 months, or those companies gave me those returns. So I'm hoping as I said, your internal rates of return, your IRRs, better be beating those kinds of returns for me. As a mentor of mine once said, nobody owes you a living, and an investor's not going to do you a favor and say, well, I don't mind, unless they are friends or family. When we look at this on a professional market, this is what my spreadsheet looks like when I'm investing in listed companies, and I'll show you what the equivalent is for your company and angel investors. That's what it is. I'll zoom in so you can see it in more detail. It's the name of the companies. We're looking at their valuation, their growth, their dividend yields, their cash return on their capital invested, their performance over the recent past, their consistency of performance, their outperformance of the market, a whole bunch of other things. That's our spreadsheet, and you're sitting there not in isolation. This is the mistake many investors make. They think it's just them, and they think it's just an absolute decision to consider them alone. It's not. You're fighting with us. So these are companies I've invested in the last, I think it's 12 months. It might be slightly more on the angel side of stuff. Okay. And I'm going to show you some of the pitch decks, which I won't be able to share after this. I'll share the slide deck, but I won't be able to share the PDFs of these because I don't think I'm allowed to. So what was it about these which put them in the 2%? And of all the things I've just outlined in very broad, fast terms, such as management and valuations, well, let's run through it relatively quickly. And I'll show you how to get these yourself anyway, and how to spy on your competitors and their pitch decks. So you can see, well, when I look through this, and I got this from them, And remember, these weren't people I knew. So this wasn't friends and family. Okay, well, first thing I see, nice, good, clear design, professionally made. So I think, yeah, these are serious people. They take time, effort, and energy. Don't underestimate that. Most of the PowerPoints I get look like, I won't swear, but yeah, they look that bad. They make you want to swear and they go in the bin. And I don't care if they're the world's greatest investments. You might say, you arrogant little so-and-so, you can't see past design. No, neither can any VC I've ever met, right? They're not looking to do you a favor and do your hard work for you. This tells me size of market. Fantastic. Tells me size of market. That gets me excited. Tells me what the problem is, right? And that the problem is big that they're trying to solve. Of course, that gets me interested. Like I said, you don't need to read this right now, but I'm telling you what it's doing. It tells me that what they're doing is, as Liv just said, are they solving a bigger problem beyond just making money? And don't get me wrong, making money in and of itself is great, but it's the bare minimum. Increasingly, more and more investors are looking at a bigger purpose, right? So serving financially underserved, fantastic. And they've given me hard numbers. I want numbers, great. And they've told me who's proving their market exists. And those numbers are big. So that, again, keeps my interest going. And then they're saying, guess what? The questions they know I'm going to ask about, what about that? What about this? What about this? They're already answering. Others aren't solving this problem. And I love these types of slides because it tells me why there's, well, you can say a gap in the market or a market in the gap, and where they sit, where they fit. And you know, so many presentations don't even put this in, where they're not explaining where they are in relation to everybody else. And that's important. It's clear. They're showing why they've got momentum, that they're doers, that they've already got success, that other people trust them. That's what this tells me. Everybody from investors to their customers. People trust them. They've got traction. They've got momentum. Of course, those things make me excited. It makes me think, you know what? My risk levels are dropping and I want to be part of this. Them saying it doesn't help. There's an old saying in journalism, which is show, don't tell. That was showing me, not telling me, oh, you've got a wonderful opportunity to join us. Then again, more numbers, traction, the direction's right, speed, momentum. Okay, if we don't have all of those things, it's going to be difficult. Each one of those things that you miss is going to make life harder and harder and harder. Okay, again, why does this help? What are the benefits to the customer? The numbers, specifics. And I think, oh, right, they're solving a problem and they're solving it in a better way than their competitors. And others haven't spotted this. Okay, what's their solution? And then they go into their solution. And because this particular company has taken a lot of time and trouble on their tech, not necessarily everybody has, doesn't matter, but they want to showcase that. I don't understand what any of that stuff means. But what's important is it looks like I can get my hands on somebody who does understand what it means. And I also know the other investors validate the fact that on their due diligence, this must mean something and it's useful, let alone the fact that they've got customers and numbers. Other than I'll show you more complicated financials, they give me financials which are easy to understand. Okay, I'm not an accountant. This, even I can understand. I don't even need to send it to people who work for me who are far cleverer than I am and can understand the really complicated stuff. But even I can understand that, and it passes sort of the initial sniff test, as it were, again, with the competitors, right? Why they can be the next big thing. Great, they've got big ambitions and they've got numbers to prove it. They've got momentum. They've got everything they have said to me so far suggests to me that they are able to execute and achieve. And then team, yeah, care a little bit less about it. Have you noticed how that is page number 15? It's not number 1. Yeah, I don't care about their CVs. Now I'm thinking, yeah, oh, wow, even better. You've got all those qualifications. Oh, even better. That's a nice to have. It's an icing on the cake when you've come in with such strong stuff up till now. Okay, I won't go into, I'll move to the other ones going forward. I won't go through each one. I'll show you that. That's financial. That's the boring stuff. Now I'm not going to do that. I've got somebody who's going to look at that stuff for me if it gets to that stage. But I will expect that level of detail. If there isn't that level of detail, then what the heck? Why are we even speaking? Here's another one that I'd invested in. You'll know I have a background in finance. I particularly like things which are finance related. This happened to be a convertible. Doesn't really matter. Again, what were they doing? Nice design, nice presentation, mission, something beyond themselves. And why is theirs different? Who is it addressing? How big is that market? Numbers, 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 right? That's big. Those are good numbers. See those numbers? Stick out. 165 million, 225 million users. Retention rate, 92%. I like that. Who their customers, they know their market. They know intimately their market, who they're after. So it seems to me like if I give them money, they're just going to execute, execute, execute. That's what I want. And again, figures. What's the opportunity? Which direction are they going in? How quickly have they been growing? Every single one of these things keeps telling me, yeah, these are doers. They've got proof of concept. So you might say to me, well, wait a minute. What if you're a first-time person and you've got none of these? Well, it's probably going to be friends and family. That's what it's probably going to have to be, I'm afraid. Finally, money box. Very clear images. Why did I invest in them? Again, very clear what the point is. Big problem they're trying to solve. Clarity of numbers, clarity of market size. What problem are they trying to solve? Is it a big problem? Why should they be able to do it? Why isn't anybody else doing it? What traction have they already achieved? What proof have they got that I should trust them, whether it's awards, whether it's reviews, whether it's from their existing investors? All of these things mitigate my risk, right? And guess what? That graph's pointing in the right direction as well. And you might say, well, that's pretty boring, Alpage. You're going for companies which, why didn't you go for one which has got zero sales and zero everything, and they've just come out of university? I could. There might be a space for those people at some point, fresh out of university types. But you got to remember, even Facebook, when they got their investors, it was growing at what, 1 million users a month or something? That wasn't fresh out of university and got nothing on paper. Traction is going to make a difference. You're going to have to show some degree of that, and that's why the first stage often becomes friends and family. And sadly, people who should be going to friends and family end up going to angels, thinking that angels are stupid people with lots of money, and they're not. Okay, again, clarity of size of market, numbers, specific numbers, not generic terms. And it tells us, join top VCs in our Series C. Yeah, great. Those guys have done the due diligence for me, mitigates my risk as a result. I'm assuming those companies are not stupid and they won't have invested without doing the due diligence. So again, reduces my risk. Okay. So again, financials, clear numbers in summary first, and then they can give more. And look, leadership team, page 18. Right, page 18, not at the front. I don't want everybody's life histories and how wonderful they are and how many grade A's they got at GCSE. Big numbers, all in one place. And you can see now, you can see a message across all three of those, what it is and what would have attracted me. And I think the decision on this was probably made in about 10 minutes. And you might say, are you kidding? It's not private equity, it's angel investment. Private equity, we have a whole team of people who go out there and get the probes out. This is a lot quicker and simpler, especially given that you're talking about smaller sums of money. So the risk in absolute numbers is smaller. So that was a 10-minute decision. I would probably say 10 minutes with each of those, and that was it. Right? Why? Because the presentations were gobsmacking, of course. So what needs to be in there? Again, I without repeating all of this, we'll make sure this slide's available to you. It's there. It's there. And that's what they've done. But that's the theory that you'll often read. You saw the specifics just now as to what is in there and what the level of quality is that is expected of you. Most common reasons to reject then, the 98% lack of skills. I'm not going to give my money to somebody who I don't think can execute. It's my bloody money. Worse than that, it's my son's inheritance. No track record or proof of concept, financial forecast, too complex. Inadequate financial returns, not scalable, lack of trust, lack of market awareness, no clear exit. Those terms now make a lot more sense when you've just seen those presentations, I think. Okay, what not to say in your business plan, you can look at this in your own time afterwards. Our target market is X million. When on closest scrutiny, it's really not. And, you know, that's why you saw with that data, the data was a lot more specific. How did you come to that conclusion? And it was something which could really stand up to scrutiny, those presentations. And you can imagine it takes a hell of a long time. Okay. And yeah, please don't say things like, can you afford not to invest? We have a wonderful, exciting opportunity. The number of LinkedIn messages I get on the wonderful, exciting opportunities. Lord knows how many wonderful, exciting opportunities I must have missed. What documentation do you need? Please make sure you understand what all of these terms mean. Term sheet, shareholders agreements, subscription agreements, investment agreements, service agreements, disclosure letters, mem and arts should be pretty easy. You should know what those mean. Please also make sure you know what all of these terms mean. Otherwise, whilst it's for your lawyer really to do it, but your typical investment agreement will have these words in there, and just take some time, Google it. Okay, you don't need to be a lawyer to understand them, but if you don't understand what they mean, sooner or later it might embarrass you. And after it's your company and your shares that you're giving away, so it's important that you're familiar with these. Like I said, it doesn't need to be intimate, but you should at least know tag along, drag along rights and so on. And your lawyer can explain it to you. How much does it cost? It varies. There's some numbers here. We got this from a company which I've used in the past to help GP companies raise money. It's a company called Investors, but there's many others. There's other angel groups and so on. And so these are their numbers, not mine, that they've given in terms of fees and costs. And sadly, I wish 20-somethings coming fresh out of university with no background could raise money at zero cost. Doesn't quite work like that, sadly. However, if you want to get a better idea of what people are doing and how they're raising, have a look at, for instance, the crowdfunding websites, because you will see, not necessarily for yourself to go on, but you will see some of their pictures and presentations on there. And that will give you an idea of what's succeeding, what isn't, what your competitors are doing, and sort of spy, as it were, on your competitors. But more importantly, educate you to raise the bar of quality. This is what your investor research spreadsheet should look like. Organization type, key investors, names, currently investing or not, value add to yours. As Liv said earlier, do they add value? Thesis fit to what you're doing. Have they already made investments in competitors of yours? If they have, they're highly unlikely to put money into yours. Okay, and then the calendar and all of that. Intro requested. Is there a mutual connection? Warm intros, statistics show, are better than cold ones, and so on and so forth. Okay, it's got to be that professional. That does not. Arpis, do you know anybody who might want to invest in my company? Doesn't work like that. Okay, and then closing process. There you go. Professionalize it. It's serious. When we were raising money for my asset management company, it had to be like this. It's tedious, it's boring. I hate raising money, but that's how it is. 3 biggest mistakes in closing that I've observed. Like I said, do you know anyone at? If you don't know how to present, anything by Kai Kawasaki is brilliant. If you want to look at more things on pitch decks, business plans, how to get warm introductions, I've done different DIT presentations on that, but have a look at my website, tech2great.com, where you'll also see some of the companies that I've helped on GP as a deal maker, but you'll also see pages which show you every UK funding source, every VC, every incubator, every accelerator, and their details, their locations, what they invest in, what they don't, every grant-making body, and examples of good business plans, and so on. If you don't know how to get hold of people and you don't have a warm intro, then I find Lusha is quite good, Lusha, and Cognism, which is trusted by Amazon. It gives you people's email addresses. Don't stalk them, but at least it'll help get access. Can we meet for a coffee? The question to ask, by the way, the old saying, if you want money, ask for advice. If you want advice, ask for money. So follow that. If you want money, ask for advice. That's tech2great.com, which has got all those resources for investors, and to wrap up, all those other sources of VC groups and getting contacts, how to do it, and so on. Connect with me on LinkedIn. It sounds grandiose, I have somebody else who goes through the messages, only because I get a lot of messages, not for people looking for investment, I should say, but I'm trying to help people out of university on a completely separate note, and so they come to LinkedIn and I try and give them career advice and stuff. So